Welcome to the channel. In this video, we're going to learn all about the income statement. I love the income statement because it really answers that question of, is the company doing well? Are they profitable or not? You hear all sorts of things about earnings announcements and quarterly earnings announcements. Well, all that stuff comes from the income statement. How will they do? Things like ratios, like price to earnings or PE ratio, obviously it's coming from earnings, which are coming from the income statement. So looking at the source material of these financial statements, whether it's a balance sheet, income statement, or cash flow statement, is very, very critical and important. We're going to walk through in this video line by line so you have a good understanding of that, and then you can use that knowledge when you're evaluating your own companies. By the way, in the description below, if you're like this video and you want to watch the other videos on balance sheet and cash flow, I have similar videos for those as well too, so I encourage you to check those out. So we're going to learn about the income statement. We're going to use a real company. We're going to happen to use Tesla. And if you go on any company's website, usually at the top or at the very, very bottom sometimes, you'll see where it says investors or investor relations. That's where you can usually find these types of statements. But a good source is Yahoo Finance, actually, and I'm going to use that for teaching purposes so we can go line by line, and that way you can actually use that same service for free to kind of learn along and look for your own companies too as well. So it's a nice way to do the learning. All right, so let's get started and learn all about the income statement. Okay, I'm at finance.yahoo.com here. We're going to look up Tesla and we're going to look up their income statement. You can just type in the name or their ticker if you know it, TSLA. So I'm just going to go to Tesla and you'll see their quote here, and you'll see this ribbon with lots of good information here that you can find in this ribbon. And we're going to go to financials, right? This is where they keep things like the income statement, the balance sheet, and the cash flow statement. You scroll up here a little bit and you can see it'll tend to default to the income statement, but if you want to go to the balance sheet or the cash flow statement, you just need to click on those. And with that, you can look at your income statement on both an annual basis or a quarterly basis. That's where you hear things like quarterly earnings. There's a quarterly earnings announcement. That's where that is coming from as far as their quarterly reporting. But if you look at an annual, you can see income statements are also things that have happened in the past. They're basically kind of report cardy type stuff of how things are going. So if we look at that, you can see going back in time. But if you want something a little bit more sooner, you'd want to go to quarterly. Oh, by the way, if you see something that says TTM, that means trailing 12 months. So this is looking back over the last year. If we look at an income statement over the last trailing 12 months or last year. But let's say we want to look at quarterly. So I'm just going to click on quarterly. That changes our numbers here because we're now looking at quarters. The other thing too to keep in mind is that all the numbers are in thousands. So what that means is we look at total revenue, and we're concentrating on this trailing 12-month number here. Total revenue for Tesla was over the last year 46.8 billion. And the reason it's billion, not million, it looks like million, that's where the number's in thousands. It's basically a way to make the column smaller because it's 478648,000 and then another 000 to make it into thousands. So this is billions, 46,848,000,000. Now, one thing with the income statement is, especially when you're looking at the quarterly income statement, is these numbers looking at the past 4 quarters add up to the trailing 12 months, right? 4 quarters in a year, or trailing 12 months. So if you look at, anytime you're looking at these numbers, you can see how they add up. But it's good to sometimes look at these numbers to kind of look for trends and things. Is our total revenue going down? Revenue being, and we're going to get into that in a second here, being sales, like money coming in is revenue, right? So we want money coming in. Is our money going up as far as coming in? Or is it going down? Are we struggling? So if we look at the last 4 quarters, we can see that each quarter, well, a little bit, we went 10.7 billion, 10.3, then we jumped up to 11.9, and then in September, really jumped to 13.7. So you can see some pretty good trends as far as over the last year. Sometimes with companies, they have seasonality. If you're a retailer, for example, and you sell clothes or you sell toys, you're going to sell a lot more, let's say, over a holiday time or a big gift-giving time, like Christmas time, than you would maybe in the middle of the year. Same thing, let's say you sell boats, right? You're going to sell a lot of boats early in the spring for people to use through the summer. Maybe you won't sell as many boats in winter climates when it's snowing. Okay, so these numbers add up to that number. So let's concentrate on the trailing 12-month number here. So first thing you want to look at for our income and what our goal of our income statement is, it's going to show us what is our earnings. How much money did we make? That's the big question it's asking. Did we make money or did we lose money? So first thing, as far as making money, you want to have money coming in. You want people to buy your goods and services. That's total revenue. You could actually call this total sales if you wanted to, and that would be perfectly fine. And then again, with these down arrows, you can see more detail. So we know our total revenue is $46.8 billion for Tesla, but does this give us a little bit more insight on where that money's coming from? In this case, it doesn't, because it's all coming from operating revenue. If we had revenue coming from other sources or unusual sources, it might list it out here. But operating revenue is basically the core of the business. What does Tesla do? They sell cars. If Tesla also sold consulting services, they might break that down. Look at maybe like an Amazon, where you have e-commerce and you have Amazon Web Services, and they get a lot of revenue from both. Or Apple, where they get money from their hardware products like cell phones, but they also get money from software things like the App Store. So they might break that out more. But Tesla, they're pretty much getting, they don't break it down. They're getting all their money from revenue. Now, again, on the website, they might they'll give you more breakdowns as far as what models of cars they might be selling better than others. But for right now, for this type of summary stuff for an income statement, we can say our total revenue is $46.8 billion. Cost of revenue, well, you got to pay the piper, as they say, right? So it costs money to make a car, right? And that's a variable cost, right? Those costs can go, kind of up and down as far as, the variability of the costs of a car. Maybe you're buying tires for that car that you're going to put on the car, and you buy those tires from Firestone or Goodrich or some tire manufacturer. That's a cost of revenue, or, historically it was kind of termed like COGS, or cost of goods sold. So that can be a more variable number, and it really is in relation to your total revenue. And you'll see going backwards that there's always a cost of revenue. There's always a cost to sell something, to make that product or support that service. So if you take your total revenue and you take out the cost to basically generate that revenue, the net is your gross profit between these two numbers. 46.8 billion minus 36 billion gives us a 10.8 billion. Now that's our gross profit. We still have more things that eat away at our profits. But right now we can say, hey, when we sell cars as Tesla, we made over the last 12 months 10.8 billion just selling cars. But that's not the whole story, right? Is that our total profit? No. It's our gross profit. It's not our net profit, because there's other expenses. And you could probably look ahead and see, oh, right, there is other expenses. So other expenses took out 6 billion, quite a bit, right? And that brings us down to our other income. The difference between these two numbers is income, right? But before we get to that, let's take a look deeper. Like, what are these other expenses? We already have expenses here to make these cars. What are these other expenses that seem so big, just eating at our profits? So let's click down and see what they are. One of the biggest expenses out there that people have, all companies will have, is what's called SG&A. Can you guess what SG&A stands for? I'm sure you did. It's selling, general, and administrative expense. So the costs that are more, they can vary whether you're hiring more people or those types of things, but they tend to be more fixed costs, or they tend to be more, costs that are not involved in making the car, right? These are selling, general, and administrative expenses. So the costs around, hiring accountants or hiring marketing people, that is an administrative expense. So you don't need marketing people to make a car. You do need marketing people to help sell cars. So that's a big part of your thing, is your SG&A. And you can look and see how are they managing their SG&A? Is it going up? Is it going down? Is it pretty steady? Generally, it's pretty steady here for Tesla, which is not a bad thing, considering that their revenue is going up so dramatically that they're able to keep their SG&A a little bit under control here, right? As far as if you look at each quarter. And then the other big number that you'll see typically under operating expenses, R&D, or research and development. And you can see Tesla puts a lot of money into R&D, $2.375 billion in research and development. Companies like pharmaceutical companies who are creating new drugs and blockbuster drugs will put a lot of money in research and development. So if Pfizer and Moderna want to make a COVID vaccine, they're going to spend a lot of money in maybe particular quarters for that research and development. So companies are really heavy on innovation or creating new products. You want to see money spent on R&D. If you see their money really going down in R&D, especially if they're a growth-oriented company, take like Tesla or take like Virgin Galactic, involved in space travel. If they're not putting money into developing space travel or building spaceships and better and cheaper and more effective spaceships, then that could be a warning sign that they're cutting their costs in maybe an area they shouldn't. But you can see Tesla has got a good balance here between SG&A and research and development. So that means, new cars and new technologies are going to come out that are going to help Tesla drive that top line revenue, those sales, right? All right, so we have sales or revenue. We take out the cost to make that revenue. We have our gross profit. We took out our expenses like R&D and SG&A, selling expenses and things, administrative. And that brings us down to other income. Now we're getting more closer to net income or net profit or pre-tax income, the different ways you can call it. But we're now close to we made 4.48 billion. And we do have some other expenses to adjust that down a little bit more as we get to our more of our bottom line. What's the bottom line income? So that's our income from our operations. By making cars, we've got operating income of this. If we consider all our different types of expenses, we have this income of 4.45 billion over the last 12 months. If we look at net non-operating interest expense, this is expenses and things that are things from interest things. So we have interest income and we have interest expenses. Probably, sometimes it gets funky with the subcategories with Yahoo. That should technically be a negative number. We can tell it's a negative number here because, these are operating expenses. And we can have, technically these expenses should be negative here. We just sometimes have to interpret the overall columns where it kind of mixes it up a little bit. But net operating interest expense, or being a negative number, is we have interest expense here. So what is interest expense? What are we paying interest on as Tesla? Well, we're paying interest maybe on our bank loans. We need to build factories. We need to borrow money. We need to do things. So maybe we're paying money on bank loans, or we've issued bonds, like corporate bonds, to raise money that we need to pay interest on, right? People own our debt. We need to pay them interest on that debt. So that's why that's such a big number, that negative 546 billion. And this would be interest income. So if we are making money, we've invested in, let's say, some bonds or different things, and you can see that's a small number typically will be, but it offsets that bigger interest expense, so they account for that. So basically, we have to pay our debts, right? We have to pay the interest on our debts, and that's money going out, and that's where that 509 reduces that operating income from 4.48 billion, and then you add in other kind of a catch-all categories for special charges and different things that might come in, like here's restructuring, mergers, other non-operating expenses, some big numbers there. Again, you'd have to go to the main site and the main income statement and annual reports and different things like that to get the reasoning behind it. But you can see when it's not as big a number, it might, you can kind of maybe gloss over a little bit. But these are numbers that are taking our almost our bottom line income, operating income, and adjusting it further down to now our pre-tax income. That's what most people consider our net income. What do we have for income that we're going to pay our taxes on? It's just kind of like you're in your own personal, balance sheet, or income statement. You have money coming in for your salary. Maybe you got a bonus and you get money coming in, or you're paid an hourly wage, and then all that money comes in has to go out to pay things like, maybe late fees on credit cards or to buy things, right? So that adjusts your basically your income done. So pre-tax income, Tesla here had $4.087 billion in income. And this is another good one. We're looking at quarterly numbers. Is that number going up, right? And we can see, yes, that number is really going up. And, that's really a great sign. Another great reason why people say Tesla, oh, the Tesla stock's so overvalued. And from a lot of measures, it is overvalued. When you look at price to earnings, different things like that, you're paying a lot for a Tesla stock. But what are you getting for that? You're getting a very definite company that is able to prove and is a leader in the electric vehicle or EV field and generate great income. But you're also getting a company that it's not just sitting on its laurels. They are also doing things like putting money into research and development to keep ahead of the competition and to keep driving that top line revenue and to drive that income and drive those profits, right? So that's stuff that drives stock prices up, is positive earnings and certainly rising earnings in the future. So we have 4.08 billion in pre-tax income. We take out a tax provision. We got to pay money for taxes. This number can be, can really adjust as they start, getting to the final what they're going to pay in taxes. But, so do consider that. But this gets down to the really net income for common stockholders, 3.468 billion. As a stockholder, a common stockholder, this is what we, basically say, hey, this is what we made on my company I own. And, if I own a share of Tesla, I don't own as much as Elon Musk, the CEO and founder of Tesla, but I own a share. That's my net income. And that's, and that's will usually be the same here. And there might be adjustments for like minority interest. See, 129 million versus let's call it 6 billion, very small number. But these are things that adjusted as far as for the common stockholders. Or dilution, of that number, they tend to be the same. As you can see, they're exactly the same. Now you do have dilution, where dilution happens is where you have, maybe you've issued more shares of stock or something like that, and that dilutes the current shareholders' shares. So when we look at, again, at an income statement, these are the boxes that you're really looking at. You're trying to go from our total sales, taking out all of our expenses, adjusting things for variable expenses, more selling expense, research and development, adjusting for our taxes, and get to our net income here. This is what we're looking for, our bottom line income as a shareholder. All these other numbers down here, you might see in Yahoo Finance there'll be maybe none here, or maybe there'll be a whole bunch of them. Like this has a whole bunch of them because it's easy for Yahoo to pull, or whatever reason that they pull from these different financial statements. But this is all stuff that's based on everything that's up here. So if you don't see any of these long things afterwards in a stock maybe you're looking at, don't worry about it. It's really just ways of highlighting things that you can look at very quickly. And some things you want to look at quickly, like if we look at over each of these different quarters, it's pulled numbers for at least the last 3 quarters for earnings per share. Looking at earnings how much net income or earnings are we making per share of stock, right? We want that number certainly to go up. Or if it's diluted, right? You can see how the diluted number's actually gone up here. Now, what dilutes shares of stock? Well, one thing that really primarily dilutes shares of stock is issuing more shares of stock. Again, these are individual numbers, so you can see where they would add up to a trailing 12 months. So you can see Tesla has been issuing shares of stock, the last 3 quarters. Let's go back up here. You can see these are the last 3 quarters, and then this is the 4th quarter looking back in time. So if we look at that earnings per share, nothing changed here looking back 4 quarters. There was no changes. But here we had a change with some dilution because Tesla issued, some shares, right? They issued shares of stocks. And that brings that number down a little bit. And they keep issuing shares of stock, and that keeps bringing that earnings per share because it's diluting it for the current shareholders. But if you bought shares right now, you'd be getting, that earnings per share of 1.62. So that's a number you can look at, earnings per share. Another thing that when you're thinking about income statements that a lot of people look at, and again, you can Google or you can look in great detail about all these different things, but 2 that also really stand out is Ebit and EBITDA. EBITDA. I like to call that. Some people would call it EBIT and EBITDA. I like to call Ebit and EBITDA, right? So if we look at the trailing 12 months here, they have 4.6 billion in Ebit, right? So what is Ebit? So it's basically it stands for earnings before interest and taxes, right? So we want to take out some of those numbers to look at, well, what is our earnings from our operations? What are we really earning if we take out things that might skew those earnings, like interest and taxes? Because we can maybe do things to lower our interest payments, or maybe we can do things that we can pay less taxes. So I want to see really more taking those numbers out, and that's where we get that 4.6 billion, because we take those numbers out. EBITDA is basically looking at earnings before interest, tax, which would actually raise that number because we're taking out that, so we actually have more earnings because we're taking out expenses of taxes and interest we're paying. So that number, 4.6 billion, you can see is bigger than our 3.468 billion of net income for common shareholders, because we took out, if we were to go back and look up interest and taxes, we took that number out. So now it's 4.6 billion. EBITDA is the same concept. It's got all the interest before earnings and before interest and taxes. And the DA part is also before depreciation and amortization. Remember we can adjust things with depreciation and amortization. We can depreciate assets. We can depreciate our equipment, which brings up our income if we're depreciating out, or we're basically taking that out of the equation. So that raises that number up if we take out, that number by taking out that adjustment for depreciation. So again, it's a higher number, 7.3 billion. So we're really looking at again, we're taking our earnings and we're making adjustments to that. And these adjustments are things that reduce earnings. And I might have misstated where I said depreciation and all that. Depreciation, we're taking that almost as a way of reducing the value of something, so we're taking that out of earnings. But again, as far as actual real earnings, I mean, you could look at your car at home that you own, maybe if you own a car, and say, well, I can depreciate that because it's not going to be worth as much in the future 2 years from now, and I can depreciate that out. And thus, when you sell it, you can sell that automobile for less money because it's a used car now, and you can depreciate even further if it's like banged up or rusty or something. So this is just another way of looking at it and say, oh, I like that 3.468 billion. That's great, Tesla. But if we really take out income and taxes and depreciation and amortization, we can see we're actually maybe even doing better, right? And if you look at the numbers, at least this one, they have numbers, you can just see how that number is really rising from 625 million to the 4 quarters ago to the most recent quarter of 2 billion, a little over 2 billion to give us our 4.6 billion. So again, with the income statement, these are all things that we're looking at answering that question, did we make money? We did, 3.468 billion over the last 12 months. And you can see we're making money every quarter, right? Balance sheet and cash flow are related to that, so watch the videos on that. But this is the income statement where it really answers that. Are we making money? And are we making money because we're selling more stuff or because we're controlling our expenses? How are we making money? And that's how you can start answering those questions, by looking closely at the income statement. All right, I hope this really helped you out as far as learning the income statement. I'd encourage you to watch the videos that I have around the balance sheet and the cash flow statement as well. So check out those videos to kind of round off your knowledge around these key big 3 financial statements. So I'd certainly encourage you to do that, and I encourage you to kind of look at companies that are of interest to you and see, how their statements look and their financial statements look. So with that, if you like this type of investing type things or this kind of knowledge, hey, feel free to subscribe to the channel. That'd be great. Love to have you as a subscriber. With that, go look at some statements, have fun doing it, and I wish you all the very best of luck.